Well, today we're taking a closer look at Fiem Industries, a player in India's auto component sector. Fiem generates almost all its revenues domestically, and so it is relatively insulated from that trade tariff war. From around 130 crores of debt in FY19, they're currently sitting on no debt at all. In fact, the cash in its books is nearly 6% of its market capitalization. Fiem's revenue model is heavily tilted towards the two-wheeler segment, which contributes close to 97% of its top line. Honda and TVS alone, they are the two large clients, which account for more than 55% of its revenues. But Bajaj Auto doesn't feature in its client list. The automotive lighting business constitutes more than 70% of its total business. But there's been a shift towards LED lighting over the last few years, as the company is focused on the premiumization trend. Over 60% of its auto lighting revenues now comes in from LEDs, where realizations are nearly thrice of what they get in conventional halogen lights. Well, Fiem's revenue has grown steadily, from around 1,200 crores to around 2,000 crores in 2024. They have outgrown the two-wheeler market while maintaining margins in that band of around 12 to around 13%. The reason they can maintain their margins is because they are supported by strong backward integration, namely in the PCB manufacturing as well as in molding. Currently, the stock trades at roughly around 13 to 14 times its forward earnings. That's reasonable for a company whose return ratios are more than 20%. Well, growth is going to be the key montrable. The company has a healthy pipeline of new projects, and rising LED penetration bodes well for them. There also could be additional growth levers in store. As time passes, they eye a higher exposure to the export markets. They're also looking to grow the four-wheeler business, as the company is now headed by Mr. Vineet Saini, who was earlier heading Lumax Industries. Well, the company, in fact, won some orders from Mahindra and Mahindra, and now they're looking to move up the value chain. They're looking basically at getting high-price orders. Well, before we wind down, we need to take on board some risk as well. Well, the promoter reduced stake a year or so ago, which led to higher institutional holding in the company, though this made some of their investors a little bit nervous. The company will also bear the brunt if there's a slowdown in the two-wheeler market, and we'll also need to track how they can scale their presence in the four-wheeler market as well as in the export market. Well, let's track this one and see if Fiem Industries can outshine the auto component sector. Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.